Hi guys, it's Doc Curry, and the markets absolutely tanked on Friday over fears over a new pandemic variant. But don't worry, in today's video I'm going to explain what's going on. I'm going to give you a market prediction for Monday, the rest of this week, and the rest of the year. So let's get into it! Okay, first of all, let's talk about what happened on Friday. Now, as I said last week, Black Friday, as it's called, the day after Thanksgiving, is a shortened trading day, and normally it's a very flat day. There's very little volume, there's very little trading, a lot of people are on vacation, and the markets are pretty flat. However, this past Friday was anything but flat. It was the worst single day drop in the markets in the entire year, and more than that, it was the worst Black Friday drop in the history of the stock market. I mean, it was bad. The Dow dropped over 900 points pretty much across the board. The markets were down 2% or more. Now, the reason that it happened was fears over a new pandemic variant, and there are some shutdowns that were happening coming out of Southern Africa, a few countries in Southern Africa. There were a number of flights that were canceled. There were fears of cruise lines being canceled again. Just generally fears over a worldwide shutdown. Now, that all happened on Friday. Of course, over the weekend, we got a lot more clarity on everything, and it looks like most governments are saying, no, we're not really actually going to shut down. We're not really worried or concerned about it at this time. The only country that is talking about more or tighter restrictions is China, but every other country in Europe and the US is pretty much ignoring the new variant for now. Keep in mind that when the Delta variant came out, there were a lot of fears surrounding that, and it ended up being a big nothing. So I don't think this new variant is going to end up being that big of a deal either, but it certainly would cause the markets to go down on Friday. However, it looks like markets are going to rebound this week. Now, Monday specifically, the futures are already way up. Europe is poised for a big green open. The US NASDAQ is already up over 1% in the futures. So it looks like we're going to have quite a bit of a rebound on Monday. Now, the question is that rebound going to last, or is it going to go down further? Keep in mind that we do have the government shutdown looming here in the United States, and we also have the debt limit ceiling that's going to be a problem as well. Now, I did a little bit more research, and I found out that the reason nobody's really been talking about this is because it doesn't look like it's that big of a deal like it was back in September that caused a near correction. So let me explain. So first of all, for the time being, Congress is still focused on this $2 trillion spending plan, and the government shutdown and the debt ceiling appear to be sort of just side projects that they'll kind of get to. It doesn't really make a lot of sense to me because it's kind of a big deal. However, as I read more into this Wall Street Journal article, I began to understand why nobody's really talking about this. So back in September, the Democrats and Republicans were in complete disagreement with one another over how to proceed with both the government spending bill as well as the debt appropriations bill, which is the debt limit bill. So obviously that caused a pretty big drop in the markets, a near correction. This time around, however, it looks like Democrats and Republicans are on the same page. It looks like they're actually going to work together. Now, Democrats only want to extend the government funding through December 17th, basically give them another 3 weeks. And the reason that they want to extend it for such a short period of time is they actually want to increase the government funding so that they can spend more money. Now, Republicans are having none of this. Republicans said, look, we already passed a budget under Trump when Republicans were in control. They are willing to extend the government spending for 1 year through the end of 2022. And so this time around, both Democrats and Republicans both want to extend the current spending bill for either 3 weeks or 1 year. The only thing they have to come up with an agreement on is how long they're actually going to extend the spending bill. However, they are working together to actually get that extended. So at least for the next 3 weeks, it doesn't look like this is really going to be a big deal. Now, that could change if the Democrats and Republicans do not come to an agreement this week. If for some reason they cannot come to an agreement, say Democrats refuse to extend it another year and Republicans refuse to extend it 3 3 weeks, for example, then we could get a government shutdown right before Christmas, and that could not only devastate the economy, it would devastate the stock market. We could see a pretty big drop in the stock market because of that. However, right now, it doesn't look like that's going to happen. So at least for the next 3 weeks, we're going to be okay. Now, not only would the government spending bill be extended through December 17th, on top of that, the United States has enough money to pay its bills through December 15th. So again, about 3 weeks from today. And the Democrats are going to have to come up with some sort of debt limit increase and appropriations bill to essentially allow the United States to borrow more money so that we can pay our bills. Now, that bill, unlike the government spending bill, where there seems to be a consensus on extending it, the debt appropriations bill is in a completely different boat. The Democrats and Republicans absolutely 100% do not agree on that at all. And so it does look like that is going to be the far bigger issue that they're going to have to tackle. If Democrats choose to go through a reconciliation process, well, flat out, they just don't have enough time. The government's going to run out of money, and we're just not going to be able to pay our bills right before Christmas. So we'll have to see what happens with that. It's going to be really interesting. Okay, later this week, we do have some minor economic news with some job reports. Not really a big deal. It looks like the jobs are going to be good again, so it should probably cause the markets to go up on Friday as well. So overall, my market prediction for this week is a green day on Monday and a green week overall. Now, for the next 2 weeks after that, though, it gets a little bit uncertain. And the reason is we just don't know what's going to happen with the debt appropriations bill. We don't know what's going to happen with the government shutdown bill. And also, if anything changes with this new pandemic variant, if countries shut down again, for example, that really could cause the markets to go down. All in all, the markets are pent up. There's absolutely nothing that's going to be coming out that's going to be great, good news that's going to cause the markets to skyrocket. Really, it's just a lot of bad news that's looming and pending. So that is a big concern. I think after this week, the markets have a much higher chance of going down than they do of going up. Now, looking a little bit longer term than that, the Federated's Phil Orlando is now predicting that the Fed is going to have 6 rate hikes over the next 2 years. That is massive. If the Fed does 6 rate hikes over the next 2 years, we could absolutely see a bear market in the United States. We could see a long 2-year bear market. It could be really, really bad. So we'll have to see what happens with that. But if inflation keeps running as hot as it has been, then yeah, the Fed's going to have to raise interest rates and it could cause a bear market. Okay, that's my stock market update. Let's talk about the crypto markets a little bit. So what we have noticed is that as of right now, crypto is not yet a safe haven for drops in the stock market. Safe havens tend to still be bonds and gold and silver. It doesn't look like crypto is a safe haven. It looks like crypto is a speculative investment. And what's been happening is it's been pretty well correlated that when the stock market goes down, the crypto market goes down. When the stock market goes up, the crypto market goes up. And one of the things that we can look at to kind of try to determine when the crypto markets might bottom out or be near bottoming out is something called a fear and greed index. So let's take a look at the crypto fear and greed index. So let me kind of explain this to you a little bit. So right now, the crypto fear and greed index is at 33. It's a level of fear. And as we can see, based upon the historical values, last month we were at 73 when crypto was running up and hitting new all-time highs on Bitcoin and Ethereum. Last week, that dropped down to 50, and this week we're all the way down to 33. Now, what's interesting about the fear and greed index is it's what Warren Buffett said. When others are fearful, you should be greedy. And when others are greedy, you should be fearful. And so when everybody else is fearful in the crypto markets, that's the time that you should be greedy. That's the great time to be going out and buying up crypto. I mean, we've got all kinds of drops in cryptocurrencies right now. Cardano is down to like $1.50. I mean, crypto's absolutely tanked. And so this is a great time to be buying crypto. Now, I want to take a look at the historical chart real fast and kind of show you how we look compared to historically over the past year. So taking a look at the historical fear and greed index over the past year, we can see that while it absolutely got lower than where it currently is around the summertime, it got all the way down to 10. And that, of course, was a great time to buy crypto. I think Cardano was down to like $1 at that time. But actually, just a few months ago, during the stock market correction, the crypto fear and greed index dropped down to 20, the level that it was at just 2 days ago. And so we are near a bottom here as far as the crypto drop. I don't know if it will drop a little bit lower like it did over the summer, or if this is pretty much the bottom, we're going to start going back up. But either way, it does look like that sometime within the next, say 2 weeks, we should be finding a bottom here in cryptocurrencies and then a rebound to the higher. And that might actually line up with the stock market, because if the stock market drops over the next 2 or 3 weeks over fears over the debt limit and the government shutdowns and the new pandemic variant and all this other stuff, then if crypto follows that, we could be seeing right around that 2-3 week time horizon where everything drops. And then come the middle to end of December, we bottom out and then we start going back up again. And so there you go. That's pretty much my market prediction for both crypto and stocks. Pretty much the same. Green day on Monday, green for the rest of this week, and then possibly going red for the next 2 weeks, and then green to finish out the year. So we'll have to see where that happens. And then, of course, longer term, we have a lot of things that could lead to a bear market here in the United States. So we'll have to watch that. But for the short term, definitely, I'm going to be holding on to some hedges in case we get more drops in the market. Going to be watching this very carefully. It's really touch and go here. A lot of news that could take the markets, and there's really no news that could turn the markets around and cause it to go back up. I really think Monday's rally is just going to be a rebound because we dropped too much on Friday. All right, that wraps it up for all of the market updates and my market predictions. Let's get into the stock picks. Just a reminder, if you are new to this channel and you've never watched me before, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who has they talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I do want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. I do want to point out that technically the NASDAQ and the S&P are both bearish right now, with them having closed below the 50-day EMA on Friday, the RSI dropping, and the MACD dropping as well. So technically the markets are pretty bearish, but like I said, I do think we're going to get a rebound off of this bearishness as we get a little bit of reprieve from Friday's drop. Okay, let's get into the stock picks, and first up is AMC. This is AMC Movie Theaters. Keen and Grace let us know that the CEO of AMC, Adam Aron, tweeted that AMC partnered with Marvel to produce 100 free Spider-Man NFTs. These are the first NFTs AMC has ever offered. Now, technically, as of Friday, AMC was very bearish, with the candles below the support level, the RSI dropping, and the MACD dropping. We'll have to see if the NFT news is enough to turn around the stock price on Monday. It doesn't look like AMC is dropping for any other reason other than the overall market. So if the market is green on Monday, then I would expect AMC to be green as well. Now, longer term, AMC is still ripe for a short squeeze with a 75% utilization rate and a short interest of 16%. If you look at the yellow line in this chart, you can see that the utilization dropped significantly in the past 2 weeks. That is often a sign that short sellers think a stock has bottomed out and they are covering their short positions in order to lock in profits or reduce losses. So the drop in the number of short sellers is actually bullish. Next up is FSR, and this is Fisker. They're an EV manufacturer that went bankrupt in 2023, but has now been restarted. Their first EV, the Fisker Ocean, is an all-electric SUV that will be delivering towards the end of next year. It is expected to have better range than the Tesla Model Y, and the lowest-end version will start under $40,000, which makes it affordable to the common consumer. Fisker is also offering a leasing rate of only $399 per month, which is nearly half that of the nearest competitor. So their pricing model is very attractive and could really help with sales. Prior to their official vehicle launch last week, FSR had 17,500 vehicle deliveries. So it'll be very interesting to see how much a reservation boost they got after their launch event. For all of these reasons, ZipTrader likes FSR for a long-term hold. Based upon price to sales, ZipTrader gave a 2-year price target of $195, a 3-year price target of $435, and a 4-year price target of $632. Now that's based upon a price to sales ratio of 15, given Fisker's current delivery expectations. ZipTrader thinks their delivery expectations are way too optimistic though, but even if you cut those numbers in half, that still gives a 4-year price target of $316. Now, in the very short term, FSR has been falling, and the chart is looking quite bearish. But in the long term, whether you buy FSR at $15 or $20, it won't really matter. Now, ZipTrader did say buying in at $15 would be better than buying in at the current price, and I agree. That said, I think the current price is still a fair price to pay for a long-term potential on FSR. So I'm going to give you a buy under price of $20 and an ideal buy-in price of $15. Again, this is a long-term hold only. If you do decide to buy FSR, I would plan on holding for a minimum of 2 years. Now, another option, given Fisker's long-term growth prospects, is to buy a LEAP call option, such as the January 2024 call option. I like the $35 call option the best. FSR will have to get to around $45 in the next 2 years in order to make this call option worth it. So long as FSR gets above $45 in the next 2 years, the call option will be far more profitable than just buying the stock. And last up is PYPL. This is PayPal. Chris Zane said to get PYPL on your watch list and to think about buying it. PYPL held strong support at $185 even as the market overall tanked last week. That is a strong indicator that PYPL is bottomed out. There's no telling if it'll go straight back up or if it'll trade flat for a few weeks though, so I wouldn't trade options on PYPL, but I do like the idea of buying shares here. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what you think the market is going to do for the rest of this year. And I wanted to let you know about some channel updates. I've got some really exciting things coming out next year. 2022 is going to be a great year. We're going to have some courses that are going to be coming out. I've got some coaching that's going to be coming out. It's just going to be a great year. I'm really just going to spend next year helping you guys learn how to be profitable and make even more money than you did this year. Or if you didn't make money this year, then definitely I want to get you profitable in 2022. Now, if you are looking for a broker to trade with, I do recommend Webull. Webull has free trading here in the United States. They offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. They have cryptocurrencies, including Bitcoin, Ethereum, Cardano, Shiba Inu, you name it. And they also have a promotion right now where if you sign up for Webull and deposit any amount, doesn't have to be $100, any amount, even $1, you're going to get 2 free stocks worth up to $2,300. Now that's only using my link in the description below. So if you use my link in the description below to sign up for Webull, deposit any amount, even if it's $1, you'll get 2 free stocks worth up to $2,300. Now, if you're not a U.S. resident, or if you're looking to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trade starts just $1 US, $1 Canadian dollar, 4 euros, or $6 Australian dollars, depending upon where you live. And Interactive Brokers also offers the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern. And in Interactive Brokers cryptocurrency trading, those trades start at just 0.18% with no bid-ask spread. It's probably the cheapest cryptocurrency trading you're going to find. And I do want to remind you that I have material connections with both Webull and Interactive Brokers. So whenever you sign up for either one of those, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. And finally, I just want to remind you to hit that like button, subscribe, and if you're watching on YouTube, go ahead and click the bell icon next to subscribe and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.